next year, SUZLON will have been in business for 20 years. The last 5 of which it is working very hard to erase in terms of memory because they've been very difficult years. After 2 years of losses, the company has for the past 2 quarters posted an operating profit. During that time, it also replaced near-term foreign bond debt of $540 million approximately with 2019 paper, buying itself some more time to pay back its FCCB holders. And the Modi government's very first budget did its bit to boost wind power in India. Does this then mark a definite turnaround for SUZLON? I have with me Tulsi Tanti, the founder and the chairman of the company, to answer that question. Mr. Tanti, thank you very much for speaking to us here at CNBC TV 18. Let me straight get to the question that I've been wanting to ask you for a long time. Does this mark the turnaround point for SUZLON?
Absolutely right, because the marketplace is so positive and the growth in the global market and domestic market is very, very positive is there. Almost industries is going in a 40% growth in the current year. So that is the good tailwind, I can say. The same time, liability management part of all the legs we have completed. Right. The last leg was the FCCB. We have also extended for the next 5 years. And we have taken care of the bondholders very well, and bondholder has supported very well. And as you know, all our debt has gone in a longer period for the 10 years, and first 3 years we don't have a much obligation for the repayment. So on the capital structure point of view, we are comfortable to concentrate on a business and growth and volume side. And same time, the policy environment in the domestic market and global market is so positive for renewable energy. So the growth potentiality is equally good. So it's very clear that for SUZLON is now standing excellent opportunity for the turnaround.
Okay, I want to test that hypothesis a bit, because you as of yet have had only 2 quarters of operating profits, not even a net profit. You're still in a net loss situation. That is a reality your investors have to face. Not just that, Q4 and Q1, Q4 of the last financial year and the first quarter of this year, which has just gotten done and the earnings have just been announced, they've not really been comparable in the sense that Q1 has been far worse than Q4. So whether you look at revenues, which have dropped Q1 to Q4, you've seen a big drop in EBITDA Q1 to Q4. Net working capital, on which you work so hard to bring those numbers down, has almost doubled back to about 6%. Still far lower than some of your peak net working capital numbers, which were 13%, but still back doubled to 6%. Net debt has gone up by about 400 crore rupees. So I'm curious to know why you feel so confident this is the turnaround time, because your last quarter was not as encouraging as your 4th quarter was of the last fiscal.
I agree, Menka, but if you see the history of the last 10 years, the Q4 is always the good high volumes.
So it's a seasonal issue entirely?
And Q1 is always a low volumes. Normally, the 10% of the annual volume is coming only in the Q1, not 25%. Okay. So that is all correction is based on that is that. But we have to see in a different way of think consistently the Q4 and Q2, irrespective of the lower volumes, we are in a positive EBITDA.
So the quarter that's currently going on?
Yeah, Q1 is a positive. EBITDA is there, but top of that, the most important is the gross margin has improved.
Yes, it has. So it has gone up to 33%, right? 29 to 33%.
33%. That shows indicators go towards the positive growth.
Okay. How is Q2 doing for you? Is Q1 therefore only a seasonal aberration? Yeah. Q2 will come closer to the performance of Q4?
No,
or will we have to wait another couple of quarters to see the performance?
Normally it's a Q1 and Q2 is a lower volume. Okay. Because Q2 again is a monsoon years for us.
So you're preparing investors saying numbers for this current quarter will also not look very good, but it's not an indication of how optimistic you are of the business.
But always H2 will be the great H2 will be the better. Okay. So the Q3 and Q4 compared to the last year, it will be far better also.
Okay, I want some numbers on your order book position currently, because it was for FY14, the 4th quarter, I think you were at 4.9 GW, and it has, so your current quarter is 4.9 GW, and your 4th quarter was 5.3. Yes. I'm guessing some amount of that reduction is attributable to completion of projects, right? Where do you stand right now on the order book position? Is it increasing, or are you only right now seeing old standing projects get completed and therefore a depletion in the headline number?
No, the Q4 was intake was high and execution was low. Okay. Where Q1 is other way around, intake was low and execution was high. Okay. So it is a normal quarter by quarter.
So where do you stand in your order book right now, sir?
So $7 billion, it's nearly 4,900 megawatt, is 5,000 megawatt order book is there. We strongly believe in this financial year it will continue to this level, and there is a chance for the improvement, because because the domestic market has come out with the right policy framework. So it will increase end of the year. Again, it's above the $7 billion.
Okay, so in FY14, just to be clear, in fact, your new orders declined 33%. You're saying that situation is going to change in FY15. You're actually going to see an increase in new orders, and a substantial one at that, though more likely in the second half than in the first half.
No, second half, the new order intake will increase. But simultaneously, we are executing. So net impact, it will remain above the $7 billion order book.
Okay.
So it will not reduce further.
Let's talk about your debt restructuring, or rather operational efficiencies and debt restructuring. You mentioned the increase in gross profit margins to about 33%.
Yes.
This is first quarter versus year-on-year quarter. How much further can you go in terms of squeezing out operational efficiencies, improving working capital ratios and all of that?
The working capital ratio is currently, it's a 6, where the industry's average standard is 10%.
But you had gone down to about 3.4.
Yeah, we have gone down because we have reduced that drastically to make a high degree of the operational efficiency. Now we have to again ramp up the volume. So it will increase little bit, but not more than 10%. It will remain below that, the 6 to 8% level, which is a very good average standard of the industries.
Okay.
So the working capital, I am not concerned about that, is because our priority to increase the volume.
Okay.
If we can increase the volume, gross profit margin, already we have achieved the good level, 33%, it will go 35%. Now concentration on a EBIT positive.
Okay.
We are EBITDA positive is there. Now we are going to the EBIT positive. And end of this financial year, we are targeting to PAT positive.
So you're going to end FY15 with a net profit? In
a quarter basis, not in a full year basis.
Q4 FY15 will be a net profit?
Net profit basis, that is our target, because during that period, we are also planning to reduce some of our interest cost also.
How are you going to do that? Because you're dealing with something like
structure
some over 500 crores in interest costs. So how capital structure optimization, what's left to do? Because you've done some part of what you needed to do under the CDR. Some asset sales are still pending, which I think you've set a timeline saying roughly about 1,000 crores of asset sales through the course of this year.
Absolutely.
You've done your FCCB restructuring. How are you going to now reduce interest costs?
So now the major
big burden for you.
Yeah, major focus is 8,000 crore rupees is our rupee debt is there.
Yes.
Which is a high cost of fund is there. So the 50% we are planning to swap by the low cost of the debt and to reduce the rupee debt.
So you're going to refinance the rupee debt with dollar debt?
Not directly refinancing that, because we have an opportunity to borrow the other side of the country. So we can raise the fund there in a debt, because the SUZLON doesn't have any types of the debt in their books.
But you've attempted to do this before, and SUZLON'S, lenders, SUZLON'S, other stakeholders have not been very...
both side of the bankers, we are taking on a board to work together to make that happen, because otherwise it was earlier not possible.
So you're going to borrow money, using SUZLON at a lower rate, and try and replace that with some of the high-cost debt that you currently have on the books?
Partly will be done by that, and partly we are planning to take it to the company, into the capital market and raising the equity. So partly will be done.
So you're going